Hi, and welcome back to the Food Fund, where we analyze investing in food stocks, beverage stocks, and restaurant stocks. If you are new here, our goal is to help you put your money where your mouth is and invest in the best food companies. In this video we will be reviewing the market share trends in the food, beverage, and restaurant industry over the past 5 years. Be sure to watch through the end of the video where I reveal how this information influences my investing strategy. Before we get started, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the Food Fund. Now, cue the logo. Okay, so most of the companies I cover on this channel have reported Q2 earnings for 2024, so now we have a pretty good idea of market share trends through the first half of 2024. Let's start at the top and take a look at total food spend by year. Here total food spend refers to the combined annual revenue all of the publicly traded food, beverage, and restaurant stocks found on market share. For those that don't know, market share is the platform I build to help me understand market share trends of the entire food industry. Obviously the entire food market is bigger than this since it contains a refined list of publicly traded food, beverage, and restaurant stocks, excluded privately held companies such as Mars Inc., Chick-fil-A, and many others. So the important data here is the trend. Okay, so clearly the entire food industry was growing until this year but has been decelerating for a while. The market grew by 16% from 2020 to 2021, 10% from 2021 to 2022, 4% from 2022 to 2023, and declined by 3% since last year. Essentially food spend has begun to contract. This is not good and points to more trouble for the wider food industry. There are two possible takeaways from this data. 1. Consumers are spending less to eat, and/or 2. Consumers are spending more money to eat from sources that are not captured by the data. I think it is a little of both. I will touch on the first point now and the second point a little later in the video. A payments article highlights the first point well. Consumers are thinking twice before pulling the trigger to buy even everyday items. A hesitation to spend that's evidencing itself in slowdowns and headwinds for all manner of firms across all avenues of commerce. There's resilience, to be sure, but the resilience looks to be flagging, at least a bit, and depending on where you look, the pressures have been in place for some time. It has been a slow train wreck happening before our eyes, spurred by the elevated interest rates. Consumers across all economic levels are pulling back, though those at the bottom have been trying to reduce costs for some time now. So we know that consumers are spending less to eat, but they are still eating. Let's see how spend has changed over the past 5 years in the food, beverage, and restaurant industries. Here we see that the food industry is made up of farm products, packaged foods, and confectionery companies. However, food spend has been in decline since 2022. Beverage and restaurant spend actually continued to grow in 2022 but also began to decline a year later. From this we see that food industry spend is the most consequential and is perhaps a leading indicator for the other industries in the market as a whole. Let's dig deeper into the food industry by looking at its sub-industries. Here the sub-industries of farm products, packaged food, and confectionery tell a very interesting story. Farm products, the largest sub-industry, peaked in 2022 and is responsible for driving the food industry trend. Packaged food spend has actually grown since 2023 with confectionery spend declining slightly. Most worrisome is that farm products, which include companies like Archer Daniels Midland, Dole, and Tyson Foods, have seen spend reduce by over 10% since 2022. Those companies are the primary suppliers for businesses in the packaged food, confectionery, beverage, and restaurant industries. If revenues for farm products are declining, it is because their customers have less demand. But I think there is also another force at play here. The second big point I had was that perhaps we are not capturing all of the spend data. Well, I think that data is getting lost in large food retailers like Walmart, Costco, and other supermarkets. These retailers have private label brands that are often cheaper than the brand names we often see in packaged goods. A USA Today article highlights this. Private label products made up 20.7% of all grocery sales in 2023. In terms of units sold, a record high. Store brands reaped $236 billion in sales last year, another record, according to the Private Label Manufacturers Association. Through mid-July, the trade group reports, 2024 sales are on track to exceed $250 billion. Walmart's most recent earnings slides confirms this, noting grocery inflation of 60 basis points and an increase in private label penetration of 60 basis points. So in addition to a contraction in the overall market, private labels are stealing sales from food companies. Let's move over to the beverage industry. Among companies in the beverage sub-industries we see a clear divergence. Non-alcoholic beverages make up the majority of beverage sales, with this sub-industry continuing to grow. However, alcoholic beverage spend has been declining since 2023. This is something I covered in a past video. Let's take a look. Globally, consumers have moved to a more sober lifestyle, hurting all alcohol producers. Sales of non-alcoholic beer have nearly doubled in the last 5 years. The implications of these trends are not good for beer producers, and I don't expect the trends to change anytime soon. Sounds like the alcoholic beverage sub-industries will be in a bit of pain for the foreseeable future. Now let's move on to restaurants. In the restaurant industry we see that the fast food sub-industry is the majority, commanding massive spend. Since 2023, we have actually seen a contraction in the fast food sub-industry. In my opinion, the reason behind this is that there is a trifurcation in fast food, with the majority pulling down high-achieving companies with dominant market share and fast-growing new concepts. A fantastic interview on the food industry investment supports this.
Yeah, that's the other thing that we find interesting about the structure of the restaurant industry. If you look at each of the major categories, so pizza, chicken, burgers, they're each dominated by a player that controls basically 50% of the market. And those brands, McDonald's, Chick-fil-A, Starbucks and coffee, those brands, they have their issues right now. It's not as good as it used to be, but those brands are pretty strong, and they are setting everything in terms of price. They're setting everything in terms of ad spend. They're setting everything in terms of delivery mix and product selection and innovation. It's good to be one of those brands. And then you have in each of these categories these emerging brands. You can pick, whoever you want, but in chicken, you mentioned Raising Cane's, Slim Chicken would be another one. In burgers, I don't know, maybe Whataburger, In-N-Out. And so you have these emerging brands that are taking share, and then everybody else is getting squeezed. And it's really a tough spot to be, for those kind of those legacy tier one brands that are kind of caught as the number 2, 3, 4, 5 player. Those are the ones that are really challenging right now.
As far as casual restaurants go, we actually see continued, though decelerating, growth. I think this finding speaks to the idea of value that has been plaguing the fast food industry. Why pay $15 for fast food when you can pay just a bit more for higher quality food and a better experience? I think the value proposition for restaurants like Kura Sushi and Texas Roadhouse are just too good for consumers to ignore. So how does all of this inform my investing strategy? Well, I am doing my best to avoid sub-industries with massive declines in spend. When we go over to market share, clearly farm products, packaged foods, and alcoholic beverage sub-industries are the ones that I am most skeptical of. If good companies happen to exist in those sub-industries, I will be interested. However, I prefer to leverage the tailwinds of good companies in growing industries. Only time will tell if this is a good strategy or not, but I am very optimistic. Many thanks for watching. What do you think of the trends in the wider food market? Please share your thoughts below. It is always great to hear from you. Please check out some more videos right now, and don't forget to put your money where your mouth is.